Is that what you're hearing in terms of what clients are talking about?
Yeah, I think as we move into 2023, people are thinking now around what are the big trades for next year, where are the opportunities? And as we begin January, I think everybody sits down and has that reflection moment. And one thing that stands out, I guess, to a lot of people is, listening to Chairman Powell, obviously trying to at least educate the markets that rates are going to have to be a bit higher than here, but also stay there for some time if they really want to control inflation. And I think that's the message that we'll continue to hear from him tomorrow. But at the same time, I think people are thinking, the market has been pricing cuts for some time, this recession risk. I don't think when I speak to investors that we really get that sense that that's coming around the corner. I think that's more early 2024 story for us when the Fed may begin to ease. And I think actually most investors are more on the same page, but it's been a difficult trade to hold. But I think moving into January next year, you'll start to see that market pricing potentially could move back a bit as those trades are put on to start the year.
And quarter, a lot of those trades is where the US dollar goes from here, right? Is it a one-way street in terms of further weakness?
I think from here, certainly positioning still looks like it can extend further for the dollar index. It does seem, obviously, that we've seen a lot come out, but heading into year end, I would expect that trend to continue. Next year, we are more constructive on the US dollar again, but it's going to be a different story to this year. It's still looking at, more selective currencies. So we do actually think that, potentially there are risks for the Europe region and also the UK continuing. So there, again, shorts that we like to hold in currency land and where we see dollar strength will continue, but it's less clear. Obviously, something like dollar yen is a very different story, where really the yen is going to be in focus next year. It should be strengthening, as we expect the BOJ will actually have to start to manoeuvre away from YCC, potentially in the first quarter or second quarter of next year.
Laura, what are the implications of your call that the Fed will potentially not cut next year, but only pause for central banks around the world?
That's right. I mean, I think at this stage, in terms of the Fed, obviously they have been quite clear with their messaging, I think, overall. We just see that at this stage, it doesn't really look warranted. We're all hoping that there can be a soft landing. And for this reason, that's part of our picture at this point. But it does seem like the markets will probably persist in pricing this trade somewhat. It's obviously something we'll continue to talk about. But the hope is that the recession risks are not as severe as maybe the market is currently predicting.
So what does it mean for central banks around the world? Like this week, for example, after the Fed, we have the ECB, we have the BOE, we have central banks in the Philippines as well. Many emerging markets really have had to follow the Fed higher. But if they don't cut next year, they only pause. What are the implications for these other central banks around the world, and perhaps what their markets are going to do next year, reacting to what the Fed does?
Yeah, so I think in terms of when we think about perhaps, obviously the ECB and BOE to come, where we're expecting 50 basis point hikes this week, I think optionality will particularly be important for the Bank of England. Clearly they're still getting some strong data. So unfortunately, it is going to be quite difficult to retreat at this stage, and they, won't be cutting anytime soon. So I think that's definitely the case there. ECB again, I think, it's probably not a huge continuation from here towards terminal around 275, but I think it's, at this stage, people want to keep their options open. I think data is going to be very important, watching the moderation in inflation, which we continue to hope on the headline front. But certainly as we head into the Northern Hemisphere this winter and we watch the energy prices, that's going to be quite key to the trajectory over there. In terms of Australia, I mean, we're actually expecting the RBA to pause in February. So the most dovish of the central banks, clearly taking its own path, downshifting before the others, and we think will also be pausing before the others. So I think that's important. I think the RBNZ, on the other hand, obviously they started first in this hiking cycle. We do expect them to continue at this pace. The market's 90% priced for another 75 move to come in February. So different story there. So I think you'll start to see this desynchronization occurring through 2023. It's not going to be just watching the Fed and following the Fed.